Plenty of updates. So I thought we'd take a look at Woolworths as stock of the day. It's out with a trading update this morning, flagging challenging conditions at its New Zealand food division, saying despite early progress in its transformation agenda, earnings for the first half in that division it will be 42% below the prior year. Given the weak outlook and the impact on higher interest rates and discounts, Woolworths has decided to take a non-cash impairment of $1.6 billion on the FY24 first half results. Woolworths is also changing the accounting treatment of its Endeavour Group holding, which will result in a net loss of $209 million. So Woolworths shares fair bit weaker today on the update as well. Mathan, what did you think of it? It's been hammered a bit in the last few weeks, isn't it, with its stance on Australia Day and the like?
Yeah, I mean, things are going wrong when politicians can beat up a supermarket.
Yep.
After a year where we've had historical high inflation, nobody cared. But now you care.
Yep.
So it's laughable. I mean, I don't think that makes a huge difference, but it just comes to, look, Woolies is a great operation. So, I mean, if you're looking at supermarkets, it's the best. So there's no doubts there. In this part of the cycle, investors generally go to supermarkets and healthcare stocks. So it's not really a surprise that the market moved into it. We actually got out middle of last year, around $40. It gets there every so often. It's slightly overvalued there. And the assumption was consumers will eventually struggle and that'll hit discretionary retail, won't hit supermarkets as much. But eventually it does. I mean, if you do the average analytics like I do, stand around the supermarkets like a crazy guy and look at other people's what they buy, you would have seen in the last 12 months substantial decrease in the size of the basket.
Yeah.
So eventually that was going to come through and it's starting to buy. I don't think this is a surprise. I think this happens. But look, at the end of the day, this is not as cyclical as discretionary retail, but it is cyclical.
Yeah.
So you'll get it cheaper. I wouldn't be jumping in. I think the cycle remains weak for the next 6 to 12 months. It's going to struggle while there's a fair amount of rate cut expectations priced in, which will unwind, and that'll be negative for it. So I think in the low 30s, I'd be looking at it again.
Right.
It's a cyclical, so you can be patient and wait for it. It's a great operation. It's the preferred supermarket, but look, even the best ones struggle when the cycle's against them. So no need to jump in.
But when you look at that chart, trade's in a range, does it?
That's right.
Just within a sort of $5 or $6 range, and that's it.
So you don't have a choice. There's not a lot of places. There's only a few supermarkets. These guys are probably the best. Coles has much more capex requirement. IGA can be quite volatile. Medcash, in that context. So in that context, Woolies is still the preferred one. So that's why you don't need to rush. You buy it at the low end of the range. You can sit and wait for it. It pays a decent yield. It's not going to go broke. And you got to go buy food. It doesn't matter whether you buy more or less. You're going to buy it.
Josh?
Supermarkets are not one that we're opting to be in at the moment. We've probably seen, the share price come down with the markets going up, so it's probably underperformed quite a fair bit in the last few months, in particular as the markets become more optimistic, looking ahead. Almost getting into this Goldilocks period, if we can sort of avoid that recession and rates coming off. So we've probably seen names like this sell off, and the discretionary stocks on the back of really strong retail numbers coming through in November, really sort of diverge. So look, today's update's not great. They've got a pretty negative outlook, $1.6 billion wiped off. Even at a large company like Woolworths, it's worth $44 billion. It's still 3.6% of the company wiped off in one decision. So it's taken against a goodwill, which I guess if you sort of buy into consumers and staff being quite negative on the company, goodwill becomes less valuable, obviously.
Yep.
Maybe they don't have that name brand in New Zealand. I'm actually not sure. But it's not one that we want to be in. They're opting for sort of weaker outlook, and it's such a low margin business. If anything gets squeezed, they're going to...
So are you in supermarkets at all, or you just avoid them all?
Just avoiding the entire sector.